Good afternoon, and thanks for joining us again on Fasanara's Digital Dividend. I'm Matt Coos, the head of origination at Fasanara Capital. I have with me Gennaro Crocomo, VP on the origination team,
Pleasure to meet you all.
and we're glad to be joined today by Rob Keown-Boyd, the CEO and founder of one of the newest SME lenders in the UK called Multifi. Rob, thanks for joining us.
It's a pleasure to be here, Matt. Hi there, Gennaro.
Rob, today we're going to be asking you some questions about Multifi so that we can learn a little bit more about what your offering is as a lender. But more than that, I think a lot of our listeners who tune in, other people in the lending space who either are thinking about setting up a lender or maybe are running an early stage lender and are facing challenges and thinking of ways to address these challenges as they come up. So one of the most useful things we like to dive into is kind of lessons learned along the way, hurdles you faced, and ways you've tried to get over those hurdles. That's really the feedback we've received. So we're very excited to hear from you, and please feel free to be as open as possible here.
Okay, well, I think I've got lots of don'ts in the things to do column, but not so many do's, I suppose. Setting up any business is challenging, but I think particularly a lending business, a fintech business, has its own unique challenges. And I think that some of the key learnings we have made so far are do not underestimate the importance of having enough equity in your business. I think that everything takes longer. Everything, I mean, technology development, regulation, recruitment, you name it. Everything which you think will take a certain amount of time will in fact take longer, and it'll cost more. So I think having the right equity in place and an understanding shareholder or shareholders is key to the success of a fintech business. Second to that, specific to lending, is debt funding and having the right debt funding provider. And I'm not saying this just because I'm on a Fasanara podcast. I think that so often we see people who do not have their interests aligned with their funder. And I've seen multiple businesses fail for that reason. So look beyond the term sheet, the rates and the numbers, and try and ascertain whether or not your businesses are fully aligned before you make that very important jump into bed with each other.
Well, Rob, thank you very much for dropping these knowledge bombs and kind of lessons learned at the top of the call. This is really the main focus and main goal of this podcast is sharing. And so we'll try to get a little into a few more of those.
Yeah, for sure. If I can jump in, because I'm super interested in Rob and his past experience, because we know, Rob, that you had a previous venture. From what you got all that wisdom that you were sharing before. So we are more interested in how was the experience from the previous venture that brought you to then Multifi and build this business.
Yes, I suppose ever since I set up my first business when I was 20, and I've always been involved with small businesses. So I come at this really more from a business perspective than a banking perspective, which I think helps with how we relate to our customers. The previous business I was involved with between around 2000 and 2010 was an online gaming business. And that was a sort of almost sort of textbook example of technology transforming a very old industry in many ways for the better. And so I think that it's not surprising I find myself now in the world of fintech, where really the same thing is happening. It's not always the incumbents who are best placed to take advantage of the technology. It takes incomers like ourselves and many others to perform that disruption.
And Rob, could you speak to the highest level introduction of if you had to summarize Multifi's offering in kind of one sentence, what is Multifi as a lender?
Okay, so Multifi, we are a London-based fintech. Our product is a revolving credit facility which we provide to UK SMEs. So we're an accounts payable system, and beyond lending, we provide what we call a cash flow management platform. So all things to do with cash flow management, whereby companies can pay their suppliers both with cash and credit in sterling and in FX as well. And I think that over time we've seen that finance is part of the solution we want to provide, but it's by no means all of the solution we want to provide. And that's very much our sort of focus for product development.
Within that offering, payables finance, serving SME borrowers digitally, multi-currency with a revolving line of credit and a cash management tool. It sounds like a lot of offerings, and within those, what could you say or maybe Multifi's USPs? You know, why would someone go with you versus one of the other working capital providers, one of the other maybe supply chain options that are out there?
I think us, like others, so I'm not saying this is a unique thing, pride ourselves on our speed of onboarding in comparison to other more traditional lenders. But one of the reasons we're able to do this is because we are fully unsecured, and we do not take personal guarantees. So that cuts out a lot of paperwork for our customers, which means that really we can get them onboarded very quickly. That also sits alongside what we believe are very sophisticated credit assessment tools, which are really sort of focused specifically on our type of lending, the short-term revolving facilities, and our systems have been tailor-made for them. I think it's worth pointing out that although we are unsecured and we do not take PGs, we have various systems in place which we believe enable us to lend in a very responsible way. The primary two things we have in place. One is our ongoing monitoring, and so as a mantra, we want to know our customers as well on day 100 and day 1000 as we do on day one, and that's a continuous automated process. Also, we provide our customers with banking facilities, and we are in effect able to collect our fees and our interest and capital when due from those accounts. So although we are unsecured, we work very closely with our customers, and we have a good control over the flow of funds.
This is, just to jump in here, this is great to hear that you have hands-on every part of the process and on every risk mitigation to make sure that you have a clear risk management in the lending activity. But we all know that as a lender, you also have to consider the macroeconomic environment that we all know that is very challenging during these days because of the constant increase in interest rate. So how are you overcoming that? What's your plan to to manage this situation?
Interest rate for us and our customers is of secondary importance to availability of funds. And I think that in our SME lending world, the most significant market condition is the availability of funds to good quality SMEs has been reduced. We're continuing to see banks retract from the market, which provides an opportunity for the likes of ourselves. And certainly recently we've seen the size of the businesses and what you might call the quality of the businesses improve as the banks retract. So interest rates, obviously, they are an important factor, but to a certain extent, we float with the interest rates. That is the going market rate for us and everyone else. It's not ideal and higher interest rates, but the key factor is the ability for us to acquire businesses that we really want to lend to.
Rob, I gotta say that's a couple of things you've hit on here are music to a dead investor's ears. Primarily being the focus on an offering that's built around credit underwriting tools that focus on monitoring life relationships to mitigate risk. And then something also that you said, which I think comes from a background in lending, a background in business, which a lot of lenders that we work with are quite reluctant to say openly, which is the pricing actually comes secondary. It's the availability of the cash to get the trade done. And if that means someone's paying 2% more because Sonia has increased 4% in the meantime, they're going to pay that. And this flows through all the way down the kind of purchase line. So as a lender, it's more about underwriting a strong credit quality borrower and opportunity, understanding the risk in the trade, and then the pricing. A borrower's not going to go away because you're priced 1% higher, are they?
That's very true. And I think the other thing which is often overlooked is the ease of onboarding a customer and the ease of managing the relationship. If you're a busy small businessman, the last thing you want is to be spending your whole life managing your finances.
And at this point in time, I know you kind of just launched. Can you speak to when did the first loan go out from Multifi?
Yeah, so very recently, the first loan went out in September of this year, and we've been really delighted with the way the product has been received in terms of the technology on the front end, what the customer sees, but also our systems behind the scenes as well. It's been well received in the market. I think that, as mentioned, we are seeing more leads than we forecast. We are seeing better quality leads, and actually the size of the business is a little higher as well. So that's been good for us.
And that's good to hear again. So building momentum, first money out the door. It was a journey in getting there. I think you referenced to earlier before everything taking longer than expected, and having a supportive equity partner through that, making it possible. Could you maybe highlight it a bit more explicitly, of course, within the scope of reason, what did take longer than expected? What were you thinking from kind of idea to launch was the original envisaged timeline, and then what did it end up being?
Real cornerstone of our credit capability is the bank system that we provide our customers, and there were quite rightly regulatory requirements around that, and those were the key things which took longer than we would have anticipated. Obviously, regulation is an increasing part of any lender's workload, and you've got to embrace it because it's there for a reason. I think that both from banking stability, but also we live in a world where there's ever increasing focus on anti-money laundering, fraud protection, etc. All of that takes a lot longer than you might think.
Sounds great. I mean, listening to all these things that you have already built so far, it's super interesting. But so what would you suggest? Like if there is a new person, new entrepreneur who wants to start a lending business and wants to get hands-on on this sector, like what is your suggestion, your biggest suggestion to give this person?
Suggestion on, when they're setting things up, what they maybe should keep in mind and view, but maybe might not have. It sounds like maybe even regulatory compliance could have been a part of that.
Yes, I would say obviously having your capital stack correct for your business goals is a non-negotiable. I think having the cash resilience and also the resource character resilience to see it through. I think that there is a lot of an ever increasing emphasis on regulatory and compliance, etc. But I also think that there is a fundamental shift when you press the on button of a platform and you onboard your first customer, because all of the assumptions that you've painstakingly been making over the past years and months are tested for the first time. And there's a balance. I can't tell you what the answer is, but there's a balancing act between sticking to your guns and ensuring that you are not bending to the first little bit of data you have, but also you've got to be flexible. You've got to make sure that you do respond to the fact that the assumptions are being tested, and inevitably they won't all be right. So it's getting that balance right, I think.
And I mean, of course, like since we're talking about somebody who wants to start a new lending business, one of the other biggest challenges is equity raise. I mean, we know that you've been very, very successful in that, even if the market was really tough when you managed to do that. So can you walk us through a bit how you managed to do it, and how did you raise such a great push to start the business?
Yeah, it's certainly important. I think I was lucky enough to have a previous successful business, part of a management team. So two of the three guys are now at Multifi, and I think that track record really helps. The key thing there to the successful raise here was having successfully built and exited a business before.
So in one word, can we say that network played a big role here, and it's good to rely on big network and to create established valuable relationship along the line.
I mean, raising equity is never easy. I think, however, if you have the right story to tell and you're telling it in the right way, there is someone who will invest in you. And if you're being rejected, it might be because you've got the wrong story or you're telling it in the wrong way. But fundamentally, there's a market out there, whatever the market conditions. It's sometimes harder, sometimes easier, but it's always there.
Those are words that I think are going to resonate with a lot of people out there who are thinking about setting up lending businesses or businesses in the fintech space, who have, of course, faced a lot of no's and rejections in the last 12 months, as we saw kind of the worst equity market in 12 years. But I think the positive message that's shown through there is it's about the story and it's about taking the right approach. And again, from our perspective as the debt funding providers, we feel lucky enough to have established what we believe will be a very long-term and life-spanning relationship with Multifi. For us, what stuck out really was things that you kind of hit on a little earlier, the fact that you built out with the focus on credit and underwriting first, with the focus on the technology that allowed you to monitor your exposures and essentially create a portfolio on an ongoing basis that didn't require the kind of hurdles that borrowers were dropping out on, personal guarantees, security on the underlying, yet still have the comfort that there's going to be performance there. Can you speak a little more to how you went about developing that approach to underwriting and thinking about the development of the actual underwriting and scoring technology which is used?
As a sort of principle, it is not about automatic decision making. It is about providing our underwriters with the best information presented on an ongoing basis in an automated way, which enables them to make the best informed underwriting decisions. I think that SMEs are too complicated and too individual to have an automated process. So it's about providing our underwriters with that information in a way that they can make the best decisions possible. We are a cash flow lender. We provide funding on the basis that people can repay and redraw every 120 days. So for us, cash is the most important aspect of our underwriting, and that's where open banking, open accounting, etc., provide us with a lot of the information that we need.
And Rob, one question. I know that it might be early stage, but it's good to think already about the future and how the business can expand already. So like the setup that you have created so far, especially on the technology side, would it allow you to offer new products category to the customers?
So the answer is yes. We have got an ambitious roadmap, product development roadmap for the next couple of years. Part of that is around lending. Part of that is around further enhancing the platform. I think that truth be told, all of our customers to date come to us because of our debt facility, and we want to move away from that to a certain degree, meaning that people come to us because of the broader cash flow management capabilities. We spoke about our accounts payable system, both credit and cash payments. We want to look at the other side, the accounts receivable, and to see what we can do using technology to reduce debtor days. So fundamentally, we're trying to get more cash into our customers' business by getting them paid sooner on the accounts receivable side, and more cash by providing them with a credit facility on the accounts payable side. And in effect, with that, a customer should be more resilient, able to cope with any unexpected bumps in the road, but also more stable and more confident to grow. And I think one of the pleasures of running a business like this is that behind the numbers there are real life stories. I was talking to a customer only last week who has been able to take on more staff. They managed to win a contract, take on more staff just before Christmas, and that's great for us. That is people having better Christmases because of what we do here. And I know that sounds a bit cheesy, but behind behind the numbers are human stories, and I think that's really what makes me most proud of what we do here.
So glad to hear this, because also it's echoing our sentiment at Fasanara, which is that our real goal in providing facilities to lenders such as yourself to fund the SME economy that's the backbone of kind of the macro economy throughout the UK and Europe, is that we have impacts on end SME customers who then have impacts on their customers, and it's when you're helping an SME borrower, as Multifi has done in your example, SMEs are employing 2 out of every 3 people in the UK. They're responsible for more than half of GDP, and so for us, it's something that we're also very proud to enable and be a part of that. It's a commendable approach to kind of setting up a business, and I think that's also something that I always want people to hear when they're thinking about setting up a lending business or entering into a fintech. Sometimes headlines or movies might perceive it all about making money, but at the end of the day, it is helping people to live their lives. It's facilitating people's businesses and everyday activities. And so to me, that sounds like what I would call a pretty big flex. But we have a section of the show we call Flex Time, in which we give you the chance, if that wasn't, to highlight maybe the one single achievement that you've cleared thus far. Of course, given that you just started lending 2 months ago, it's very early on, so maybe it's something, a big hurdle that you faced in setup, or a challenge, a technology problem, a product problem that you solved to get the product live. Is there one single thing that you would want to shine a light on right now, and maybe also talk to the people in your team who helped you solve it?
There are various things which we're very proud of. I think it's challenging enough to actually manage to launch a product like this. There are many things which you've got to get right. We've spoken about the funding, the technology. You've got to have the right team in place, and it's a very proud moment to get our first customer over the line, and our first funds out the door. But there's obviously sort of a lot more we want to do there.
Okay. We won't take too much more of your time, because it's about to be the holidays, and you've also got a startup lender to attend to. And so I just give you one last chance here. If you wanted to summarize your offering to a potential borrower, I'm an SME looking for additional working capital, what could I get from Multifi?
Yeah, so we provide UK businesses with a revolving credit facility which they use to make payments to their suppliers, whether they're in the UK or overseas, in sterling and in multiple FX. So you can think of our platform as being like a payment system which gives you credit. It is quick to onboard, it's easy to use, and what we've found is a very sort of nice surprise customer base once they get up and running with us.
Sounds perfect, Rob. We really appreciated your time, your precious time, especially in this moment of the year that the business is ramping up. And we look forward to grow the partnership with Fasanara, and looking forward to it from you again.
Okay, well, thank you both very much for your time and your questions. Hope we have a chance to catch up soon in the new year.
Sounds good, Rob.
Great
Thank
day.
you.
Bye-bye.